Welcome back, guys. Today, let's apply different metrics to evaluate Pien Tze Huang. Pien Tze Huang is a famous Chinese medicine company. Its main product is a medicine called Pien Tze Huang. It's mainly used to treat liver disease. This medicine is quite expensive. Its price is around 700 Chinese yuan or $100 per tablet. Its formula is a highly confidential top secret protected by the Chinese government. And one of its main ingredient, musk, is under highly strict quota management in China. And half of China's musk quota goes to Pien Tze Huang. So the secret formula and the musk quota help form Pien Tze Huang's moat. Alright, let's first take a look at company size. Pien Tze Huang's market capital is 120 billion Chinese yuan. Ranked number 1 in traditional Chinese medicine industry. Its annual revenue is around 10 billion Chinese yuan. Size is big. Number 2, financial condition. Pien Tze Huang's current ratio is 3.8. Its net working capital is many times of its long-term debt. Its debt to asset ratio is only 19%, and its financial expense is negative. So Pien Tze Huang has got super robust financial condition. Then let's look at earnings performance. Pien Tze Huang has stayed profitable for 25 consecutive years. In the past 10 years and 3 years, it showed decent earnings growth. Next, dividend record. Pien Tze Huang has paid out dividend for 23 consecutive years. In the past 3 years, its free cash flow can comfortably cover the dividend payouts. However, the 5-year average dividend yield is quite low, only 0.9%. Then let's look at valuation. The 3-year average PE is 46. Market capital is around 40 times of 3-year average free cash flow. Price to book is as high as 8. Even though its ROE is excellent at 22.5%, its ROE to PB ratio has not met our greater than 8 requirement. So far, our quantitative analysis shows that Pien Tze Huang has many pros and a few cons. It's got abundant cash and very little debt. Financials are super healthy, nice long earnings and a dividend track record. Yet in the past few years, the dividend yield is poor. In terms of valuation, if you only look at PE and PB, they're over our ideal range by a lot. It's worth noting that its ROE is fantastic. It's high and stable for many years, and its ROE is not boosted by high debt or leverage. So Pien Tze Huang has been a real money-making machine. When working out this kind of company's valuation, we should give it a high premium. However, after some qualitative analysis, I'm a little hesitant to give it a very high premium. So what are the things that worry me? First, Pien Tze Huang is mainly for treating liver diseases. It's not among the 3 most common diseases, which are diabetes, high blood pressure, and a cardiovascular disease. The number of hepatitis patients is much fewer than the 3 main diseases. Number 2, one of the main occasions for consuming Pien Tze Huang is fading out. That is socializing for business purposes. Due to the real estate and the big infrastructure slowing down in China, also the alcohol ban posed on Chinese government officials, the business social events are much less frequent these days. This part of Pien Tze Huang sales will for sure decline. Lastly, Pien Tze Huang has some cost control risks. So 2 of its ingredients are highly rare. One of them is musk, and the other is bovine bezoar. Pien Tze Huang's musk supply is secured by China's quota management. Its bovine bezoar supply, on the other hand, is under high risk. There's a long-term bovine bezoar shortage across the world, which means Pien Tze Huang's cost may be vulnerable to bovine bezoar price fluctuations. Based on these concerns, when I calculate Pien Tze Huang's intrinsic value, I can only give it a relatively optimistic estimation. For liquidation value, I take the stock equity directly from the balance sheet without discounting any of the asset items. For next 15 years dividend, I assume it sustains a 5% annual growth rate. I do not add any more premium on top of these, and I got the result of 56 Chinese yuan per share. This result is much lower than the current market price. Maybe because I'm an amateur and I lack enough understanding of this company. If you're more familiar with this company or this product, please discuss with me in the comments. Thanks for watching. I will see you guys next time.